Paying off credit card bills inside of QuickBooks Online might sound like a pretty straightforward task, but many of the small business owners I talk to that are still doing their books actually mess this one up. This can lead to you overstating both your expenses and your liabilities on your financials inside of QuickBooks Online, so it's important that you get this figured out correctly. Real quick, my name is Arthur. I'm a certified pro advisor inside of QuickBooks Online, and I'm also the founder of S&G Bookkeeping, an accounting and bookkeeping firm that uses QuickBooks Online to help small businesses across the US with their financial reporting and their accounting workflow. So let's jump into QuickBooks Online right now, and I'll show you exactly what you need to do to make sure that you don't mess up your financials. So here we are in the sample company in QuickBooks Online in Craig's Design and Landscaping Services. Now let's go to the top left, transactions, bank transactions. Now, if you already have these bank feeds set up, you should be good to go. But essentially, these bank feeds are actually your bank and credit card accounts, and that you just connect to QuickBooks Online by going to link account right there on the top right, and then picking your bank or credit card company, and then following all of those steps. And the cool thing is, whenever you do connect one of those accounts, it automatically brings in all of the transactions from those accounts into QuickBooks Online, so you can easily select your vendor, select the category, and so on, to make it easier to categorize all of your transactions and make sure your financial statements are accurate. So, if you have that done, then obviously you would, as you typically would, just go categorize all of these transactions. In this case, for example, Books by Bessie, that's her vendor. I know she's the bookkeeper for the company, so we could select bookkeeper. This is our checking account. As you can see, you could just change between the accounts by clicking at the top right there. So that was a transaction in our checking account. Our MasterCard account, let's see, this is our credit card. So we can just, Laura, we don't have that vendor, so we could actually just type it in lamination, press add new just for this example. We could save that right there. And as we can see, this is a business card, so we can just call it advertising expense. Now, just bear with me. I'm going to show you the error that comes about that most business owners make when they're still doing their own books, and I'll show you how that actually messes up your financials. So now if we go to reports and standard reports, I just want to show you our balance sheet and profit and loss before we make that mistake and after, to show you how it negatively impacts your financials. So if we are looking at our MasterCard account, that means we have $307 that we need to pay off on our MasterCard account. And then if we click on that, we could just see our transactions. So that includes the Laura's lamination, that $150 charge in there that we just categorized. And our profit and loss should include this advertising expense as well. So if we scroll down to advertising, there it is, $224. We can click on that number and see, yeah, that $150 expense is in here as well. So we already took care of the categorization. We properly labeled it as an advertising expense. But here's where the error can come in. So let's say we go to our checking account and we see this $114 payment. Now, this is the sample account, so unfortunately, I can't change this bank detail. So it's not, let's pretend it's not PG&E. Let's pretend it's MasterCard, because as you saw previously, that's our credit card. So let's pretend like we're paying off that credit card account. But some business owners might think to themselves, so I'm paying off that advertising expense I just had on the MasterCard account. Obviously, that should be an advertising expense, right? So advertising, since like we mentioned, we just had a MasterCard transaction for advertising. Now we're paying it off. So we should keep it consistent, keep it advertising. Now, this could be for whatever service you're using. If, for example, you know that on your MasterCard account, you make a lot of inventory purchases, then maybe you can categorize this as inventory. But now let's take a look. It doesn't really matter which category it is. The fact is that we're categorizing this MasterCard payment as an expense on the profit and loss. Or, for example, if you were categorizing it as inventory, that would be on your balance sheet. But we can confirm that right there. And now if we go back to our reports, and let's take a look at our balance sheet. So think about it. If our liability was $324 approximately, or $307 right there, and we paid off 100 and change on the from the checking account to the MasterCard, we would expect to owe 100, and I believe it was $104, $114 whatever that transaction that I categorized, we would expect to owe that much less since our bill would reduce by that much. So theoretically, if we did this the right way, it should decrease by that $104. I'm going to redo that last part. So now I want to take a look at our profit and loss and balance sheet again, just to show you the impact that that had on our financials. So in the profit and loss, we can see that if we click on this advertising expense, it went from about 200. It went from about $224. This is what we saw previously, and we added another $114 by categorizing that credit card payment as another advertising payment. And then also, if we take a look at that balance sheet that we had, I believe, $308 on the MasterCard, $307. But think about it. We just paid off that $104 or $114. I forgot exactly what that number was that I categorized it. We would expect this number to decrease by that amount that we just paid off, because this is our liability. This is how much we owe. If we paid $104 on that liability, we would expect this to decrease by that much. But obviously, since we didn't categorize it to this credit card payment, it didn't do that. So as you can see, this overstates our liability, how much we have to pay, and it also overstated our expenses in the advertising section. It essentially double counted that expense, which is not what we want. What we want is to actually have that transaction reflect what happened in the business. So we didn't pay for advertising. Once again, we actually paid off that credit card transaction. So I'm going to undo that, go back to for review. And the right thing to do here is to go back to that transaction, click on it, and then we want to record it as a credit card payment. So now if we record it as a payment and we select our credit card, which was MasterCard, vendor who you paid, I guess you could leave it as MasterCard, but this asterisk right here, this is the only one that's required. Now, if we categorize that as a credit card payment and we go back to our reports, now we click on our balance sheet, we should see that amount decrease by $104. So it should be about, there we go, or $114, sorry. So now it decreased by that amount. If we click on it, this payment shows up kind of in the middle there. It might throw you off, but that's because of the date. It goes in a chronological order. So it reduced our balance by $114. As you can see, the transaction type is a credit card payment, which is exactly what happened in real life. So we want to reflect that correctly in QuickBooks Online. And now if we go back to our profit and loss, our advertising expense should decrease by that $114 as well. So if we go to advertising, there we go, $224 instead of the transaction amount that it was before, which was $114 more. So it was about $338. Now we have this at the correct amount of $224. So we're not overstating our expenses and we're not overstating our liabilities. We're making sure that both of those show up correctly on our financial statement. So that's a big mistake that many business owners have to make, but it's something that you need to be aware of. So as you can see, it is a pretty simple fix, but it's one that needs to be done inside of QuickBooks Online to make sure that your financial statements, specifically your profit and loss and your balance sheet, are accurate and up to date. As always, if you have any more questions about QuickBooks Online or just accounting in general, drop them in the comment section below and we'll get back to you as soon as possible. And stay tuned for another accounting and bookkeeping tips video coming out next week.